Happy Friday. Brian Manning here with your weekly update. Let's get right to it. Relatively quiet news week with not a tremendous amount to report overall for U.S. economic data. Monday, quiet news day. Tuesday, we got some foreclosure data. So really great to see that in February and year-over-year basis, only 1.2% of all homes nationwide were in some stage of the foreclosure process. And serious delinquency, so that's people that are 60 days or more late on their mortgages, we're down to 3.2% of all people that have mortgages in the U.S., which is really amazing. This is the lowest number in 8.5 years. It's really great to see appreciation in the housing market. It's kind of this magical elixir. When people have appreciation, somehow they figure out a way to make their mortgage payments on time and not let their property go into foreclosure. So seeing some really solid housing information here. Wednesday this week, pretty quiet news day. Biggest market mover this week was on Thursday. We had the European Central Bank, Mario Draghi, come out with just guns blazing and really working towards their stabilization as well. 3 big announcements in these stimulus packages for the European Union. So, number one, the ECB added more to what was already in existence for their version of quantitative easing. So that's their bond buying program. Same thing we were doing here back in a few years ago in the United States. Number two, they took their benchmark rate down to 0. Which is really incredible to see. Really most important though, number 3 was that they reduced their depository rates by another 10 basis points. So depository rates were already at a negative 30 basis points. Add another 10 to that, now they're down negative 40 basis points. So can you imagine going to the bank, giving them money, and paying a negative 40 basis points on the money that you have there just for them to hold your money in the bank? So negative rates, probably not the most exciting, and they're certainly trying to stabilize their economy there. And the goal of this is that they figure if people are paying to have their money in the bank, that they would rather go out and spend the money versus pay to save it, and that's one of their ways to try and stimulate the economy, trying to get people to go out there and spend more money. So, initially the markets were not happy to hear this, but after all, the markets started to rally because then Mario Draghi announced and acknowledged that they probably don't see any more future rate cuts because they've just tried and tried and tried, and they're just not going to keep dropping rates. So certainly got some stock market rallies there. Today, relatively quiet news day, and things will start to heat up next week. We have the Federal Reserve meeting, and really don't anticipate a Fed rate hike next week. But all eyes will be on their statements, and certainly the statement from the Federal Reserve is always going to be a market mover, so let's just wait and see what happens. I will be around all weekend. If you have any questions, give me a call. If you have any buyers that need to get pre-approved, I would love to help you out and be part of your business. Happy Friday. Have a great day and a wonderful weekend.